Another edition in this Trading Tip Tuesday for Brave New Coin. So long as I get questions about cloud trades or cloud setups, I'm happy to answer them. I got several questions about basically the specifics of these edge-to-edge trades, how exactly to trade it, step by step. So this is one such example, one such trade I took. This was at the end of 2018, early 2019. And a few things you have to realize. Higher time frame always wins. At the moment I post this video, I'm going to get 10 people asking me about some hourly edge-to-edge trade on some altcoin. Is it possible that it works out? Yes. Can you trade it effectively? Yes. Do all the same principles apply? Yes. Does the way you trade it apply? Yes. All of that applies. It's all the same. You can do this on any chart, Forex, whatever, it doesn't matter. Use whatever settings you want, I don't care. For me and my trading style, I am most comfortable on the daily chart on a high liquidity, high market cap coin, such as BTC, such as ETH, anything in the top 20, let's say, because it is most likely going to behave as I expect it to, based on the signals, based on the time frame, based on the cloud settings. Cloud settings are 20, 60, 120, 30 on the cloud here. And this is specifically a reversal trade. This is not a trend continuation trade, which means if this is a bear market, if there's a bear trend, if this is a bear rally, your trade is going to be the opposite of that. It's going to be contra trend trading. You're picking out the bottom. You're trying to say to the market, I know exactly where this is going to reverse. We're going to look at what to look for. So you need to have the assumption that this is going to work out as I expect it to. I'll show you an example of how this didn't work out and what the stop losses are, whatever. So we're in the doldrums of 2018. Price is irrelevant, honestly. It just so happens that it's in the 3000s at this time. But at the end of the day, I trade the setup, not the price. So this is effectively the same at any price level for anything. Setup's the same, idea's the same. My mindset when I see the cloud fractal look like this is immediately, I'm looking for a reversal trade for two reasons. The Tenkan and the Kijun, these lines here, are highly separated. There's a disequilibrium here. When you see a disequilibrium in the cloud, whether it be the cloud itself or the TK lines, that's price telling you that there's been action very quick for this specific time frame. And at the very least, your expectations are a mean reversion or consolidation before trend continuation. So you need to understand that part of it first to identify this. Okay. So as we're going along here, in our mind, our expectations, our trade setups are going to be, where's the bottom, where's the bottom, where's the bottom, day after day, week after week. That's all we care about. This TK equilibrium tells you, be careful going short here until the TK lines are meeting one another once again. So if we zoom out a little bit, keep going here. So the TK lines touch each other once again. They sort of crisscross and they recross bearish. So right at this point in time, what the cloud wants you to do is open a short. That's what it's telling you to do. It's telling you that there has been plenty of consolidation. There has been plenty of time for this to reverse, and it did not. So your short at this level is a continuation trade, and your stop loss is the other edge of the cloud, or this first edge of the cloud. So this is the stop loss for the short side, and maybe this will help you understand where the edge-to-edge trade comes from. But right at this moment, you're supposed to be short based on the cloud. This is typically an excellent signal because it's telling you this is a short continuation trade. It is a bearish TK recross below the cloud. It should be the strongest signal for continuation in the cloud system. So it's telling you to open short with a stop loss at the edge of the cloud. And you're actually adding to the short. Put this somewhere down here. You have asks at Kijun. So your mindset goes from, this is a TK disequilibrium, I don't want to be short, to, okay, this has reconsolidated and has recrossed short, and this is in trouble once again. And because your asks were at the Kijun, you're actually in more short again there, right? This whole time your stop loss is at the cloud, if you're playing this correctly. So right here on this day, you could say, all right, that's the short, stop loss, hit. And I'm out of that trade at that point in time, if you're still short. We had a candle close on this time frame inside of the cloud. So if you were playing this short to the short side, which you should have been based on the trend, regardless of where this sits on price, regardless of where this has been since 2018, you know, whatever. The cloud is telling you this was the trade to take, this was the short to take. This gets stopped out for a loss, a small loss. Additionally, while all this is building for the short side, you have a long flat cloud. When you see a long flat cloud, typically that indicates it is a price magnet. There is some sort of 50% fib, which is basically saying it's a mean reversion. I can never find the fibs. There's a mean reversion potential here. It's the fib of something. In this case, it's whatever this was, this high to this low. It's the 50% level on the way down. It was the 50% level here. It was the 50% level here. And this gets longer and longer so long as price doesn't make lower lows. So you have your trend, you have your re-entry on your short. Expectation is we make lower lows. We don't, okay? And this is where you can start trading the edge-to-edge move. So, and begin to open long for E to E. So this is highly dependent on the person and their account and their leverage, but let's say on this short entry trigger, you're opening 25% of your total position, you're adding on any of the asks, 15%, I'm just making up numbers here, whatever you want to do. You know, maybe you're opening 50% and adding each time. The same principle applies on the beginning of the edge-to-edge moves. Now, I don't typically like to jump into an opposite trade if I just hit a stop loss of a trade, but for this specific setup, this is what it's telling you to do. It's telling you this is the beginning of the edge-to-edge move for this trade. So it is appropriate to open the long side of the trade at this point in time. On this specific day, at the end of the day, whenever the candle closes, no sooner is when you start opening the long side of this trade. Something else you're looking for this reversal trade is a bullish TK cross or a confluent TK cross. You're looking for the TK cross to match the trade itself. So we have a move into the cloud. We do not have the confluent TK cross just yet. So this is why you don't go all in here on this edge-to-edge move, because we do not have a confluent TK cross yet. And as far as a stop loss at this specific point in time on this new entry, you're probably using some sort of horizontal that makes sense. Almost always there's some sort of horizontal, whether it be the Tenkan or the previous low here. Again, this depends on size and leverage and risk tolerance and that sort of thing. But if I'm opening along up here, my stop losses are most likely at between 35 and 33. You know, 3333, some sort of psychological level, whatever. If we break this level, we're in trouble once again, right? So those are our stop losses. And we're currently in the long. We're just holding. We're not doing anything else. We're not adding to the position. We're not doing anything like that. All of a sudden on this day or the next day, we get arguably it's a TK touch. It's not exactly a cross just yet, but you could consider it a cross, okay? So you're adding to the position once again. Maybe you're doubling down. Maybe you're adding 150% of what you opened, but you're adding to the position and you're holding with the same stop loss as before. And then you just wait. You wait and wait, and here you get an actual cross, the Tenkan's above the Kijun, and maybe you're just adding at the Kijun here, but at this point in time, your stop loss moves up to the bottom of the cloud. So you're just waiting. You're still waiting. You're holding this whole time. Your target for the edge to edge, I got this question a lot too. Where's the exit of this trade? Your target is the other edge of the cloud. So it's all the way up here. So you could be adding this whole time on the Kijun, on all these taps, depending on how you want to play this. Again, size, leverage, risk tolerance, etc. And it doesn't always happen in one day like it did at the beginning of Q2. But here's where you actually get an overperformance through the cloud, and then this continues on. That's certainly not the expectation. The expectation is, at a bare minimum, you get this move, at a bare minimum, whenever this enters into the cloud. So that was an example that worked. Let's look at a setup that didn't work and looked really good. So a few things leading up to this. We had this inverted head and shoulders that didn't work out. We had a Kumo twist that we didn't go through. We had the potential for this Adam Eve situation. Again, we have this flat cloud equals magnet for price. So this is the sort of setup we're looking for. Some sort of reversally signals that are repeated or recurrent. We had a W double bottom here. So we're looking, leading up to this, we're looking for other knowledge that tells us this is a potential reversal trade setup in the making. The TK lines here are getting separated as well. And as we move on here, we're getting ready for that. You know, if you're not already long because of this, the W double bottom, you know, you could be long from here with a stop loss here based on this breakout trade, but you know, that's a different video. We're looking for edge to edge setups here. So we're getting ready. Once this gets into the cloud, again, that's what we're looking for. Because if you were short here on the bearish TK recross below the cloud, your stop loss is the cloud, you're adding on the Kijun. That gets a little messy when those are equal, but that's what you're looking for. So let's say you're adding to your short and then we bust through the cloud, right? So all of a sudden it's game on and we say, okay, let's open a long on this day, a small size. We will add additionally when we get a confluent TK across, and you can see how that looks. Not yet confluent, still bearish. So we're just holding this whole time. And again, your stop loss on the initial entry is probably here based on some horizontal. So you're waiting for that cross, still waiting for that cross. We get our cross. You're adding again here on this day, right? Things look pretty good. We still have the long flat Kumo. We still have the possibility of an Adam and Eve here. We have the possibility of maybe another inverted head and shoulders happening, right? Like this looks okay for a reversal trade. And at this point in time, when we get this TK recross inside of the cloud, typically I put my stop loss again at the bottom of the cloud. It's usually sort of imperfect as far as what the cloud looks like, but you get a pretty good idea of where the stop loss should be. So at this point, we are long, waiting for the reversal trade, waiting for either 11.5 or 12.8, and we're either adding at the Kijun or we have a stop loss down there. It gets a little messy when they're equal, so you could be adding if you're confident on the long side of this, but ultimately the stop loss should always be dictated by the edge of the cloud. So we're still long, we're getting nervous, we're underwater. We haven't closed below the cloud yet. We're getting close, we could be adding again, but on this day, we're out of the position. We've hit the stop loss. This is an edge-to-edge failure. You hate to see it, but this represents a bearish Kumo breakout. So at this point in time, you could flip short completely. You know, you were long, you're flipping short based on this bearish Kumo breakout below the cloud. And if you're short, then if you're short, you're waiting for that confluent bearish TK cross as well. So let's say you're short on the initial entry here with a loose stop loss for some horizontal, that makes sense, right? Because the cloud is right there and you get your bearish TK cross right there. So you're adding again to the short side and your asks are at the Kijun and you're just holding this entire time, moving that Kijun or moving those shorts down. You're adding to your short here and you're really hoping this doesn't go into the cloud. It does. You get a bullish TK cross. And all of a sudden this starts to get super messy on signals because the daily trend is relatively ranging and your entries and stop losses kind of match each other and the whole thing just starts to become a mess, which is why I use fractals in addition to cloud setups for stop losses. But again, that's a different conversation, different video. Basically, when we break above a bullish fractal, then you're out of your short position. So you would have been out right here on June 30th. On this initial short entry, out completely. And then hopefully you have a little bit more information in your knowledge bank and you realize, oh, this is an inverted head and shoulders. This is probably going to break up. I probably don't want to be short, you know, et cetera, et cetera. So those are the edge-to-edge setups you're looking for. You know, an active one is on the weekly gold chart, which I've talked about a few times. Higher time frame is always better. So you are short on this gold trade March 1st. And you're waiting for that confluent bearish TK cross to add more to that trade. Your stop loss is kind of up here somewhere based on the edge of the cloud. We can look at the ETH setup, which is super clean on the daily as far as your stop losses are concerned because it's a flat cloud on both sides. So this is the type of trade you're looking for on this setup here. When we dip into the cloud, that's your long entry. The TK cross will likely already be bearish based on where this sits currently. So if we break below this, I'm fairly confident we're going to touch the other edge. Now that's not a massive trade, but it's a trade worth taking for me on leverage based on the time frame, based on the success of these trades, based on how this works in general. And you can look at how these look even on this little example here. It almost always wants to touch that edge. Where it goes from there is a separate trade entirely, but what you're focused on is this move here. So hopefully that helps. Hopefully the step-by-step examples show you when it's clean, when it's messy, when it doesn't make sense. But this setup here on ETH, which I'll continue to mention, is definitely one worth watching. And let me know in the comments below if you see any edge-to-edge moves. It's one of the best things about having a community of people watching this stuff. I can't watch everything all the time, but lots of people sort of key me into certain trade setups that I do end up taking most of the time.